So our first story today. Now, Alex Mashinsky is the CEO over at the crypto lending platform Celsius Network. And he appeared on the David Pakman Show yesterday, and he discussed why Bitcoin crashed in March, along with everything else, actually, despite Bitcoin having this reputation and promise of being a safe haven asset, right? So the question is, why was Bitcoin not ready to shine after the 10 years of work that have gone into it at the most critical moment, at the biggest economic crunch, at the most critical downfall, when we really needed it to shine, when the world economy started to melt down? Why did, Bitcoin, why hath thou forsaken us, right? So this individual goes on to explain how Bitcoin has not yet become enough of a non-correlated asset for investors to turn to at times like these in the current financial crisis. Like Bitcoin is, if you are unwinding a large portfolio, or if you are a large investor and you are watching the SPY, the Dow, the NASDAQ collapse, stocks fall off the bottom, the last thing you're really going to be thinking about is Bitcoin, he says, at this point in time, which seems to kind of be the same argument that we covered yesterday, which is giving Bitcoin quite a lot of slack. Honestly, I like to be fairly critical on the things that I support. But I mean, that whole argument is predicated around, hey, Bitcoin, you just need more time, right? Like Bitcoin is certainly the digital store of value, which I believe that it is. We just need more time for more adoption and there to be more faith in it when we get to a point where that becomes very important. Now, Mashinsky pointed out that if you take any snippet of Bitcoin's chart data from the past year, you would see a very high correlation between the stock market and the price of Bitcoin, which is exactly what the Fed Kansas City report pointed out as well. And of course, there are correlations. In fact, there are some, algo traders that I'm aware of that utilize the same kind of price action of the SPY to offset correlation on Bitcoin's price action, right? Now, this correlation signals to the fact that investors, during the current crisis, to them, Bitcoin is still a risk-on asset that enjoys speculative interest during good economic times, and of course is the first to get sold off during poor economic times, right? And of course, this was the David Pakman Show where he appeared. I mean, that guy looks, David, I mean, he looks like, anyways. Now, a recent report from eToro on the crypto markets confirmed something similar, right? That the past 12 months has seen a strong correlation between the S&P 500 index, for instance, and Bitcoin's price. However, the report also notes that since last month's market-wide March meltdown, Bitcoin has since recovered significantly from its trading lows. And due to this shift in the trend over the past several weeks, Bitcoin now finds itself more closely correlated with gold than traditional markets. So the correlation was extremely strong for the S&P 500, but over the past month, it has correlated more with gold. Still, even with Bitcoin riding on the back of its strong recovery and the upcoming, the Bitcoin halving right around the corner, right? Bringing its own hype cycle that potentially cannot be priced into the market, along with newly circulating data suggesting this correlation to gold over the S&P 500. We still, and to be fair, to be fair, with the eToro analysis and even with the Fed analysis, right, that this correlation to gold is becoming. It depends on how much you want to smooth the data out, right? It depends on how much you want to smooth the data out. Both gold and silver and stocks and Bitcoin have seen a dramatic bounce off of the bottom, right? So if you're looking at the difference between intraday trading sessions, the difference between 15-minute bars, the difference in closing value, the difference in rate of change, I don't think that these things are actually too disparate. I don't think these things are too disparate. I think at this point in time, they don't have a whole lot of data. They're going off a month of data. So I'm actually going to say, although again, this is not the most Bitcoin Pro argument, I'm going to say that the data on that is actually really not in yet, right? Now, of course, Bitcoin, even with traditional markets right now, still has this very strong reputation for volatility, but apparently these guys haven't seen the oil markets lately. And Bitcoin, the argument here, that Bitcoin has yet to capture the imagination and faith of the masses as an alternative asset to hold at times of instability, like we saw in the March market crunch. But we could potentially be seeing that start to change now as this pandemic continues to unfold, as the lockdowns continue to go on, as restrictive measures continue to go on, as it seems that some governors want to play Mad Max, right? Like, just, Orwellian. And Bitcoin enters the next phase of its price and adoption cycle. So all of these things are occurring while some strong fundamentals are occurring with Bitcoin, right? Like Lightning Network adoption increases, right? New products and services continue to come online. Bitcoin continues to grow in actual use case and adoption. More nodes are coming online every single day. More people are using, more wallets are being created. And of course, you have the halvening. On top of that, you have, for example, all of the features are going to be added to Bitcoin Core this year. For example, Taproot, among other things, the things that Taproot are going to open up, Schnorr signatures. Now, going back to Mashinsky said that 5 years ago, Bitcoin looked volatile against stocks. But times are changing now. And those days are kind of gone. And these days, when Bitcoin has more stable days than traditional markets, ones in which Bitcoin moves 2% in a day where the stock market has moved 5 to 10%, perhaps in an attempt to, going back to the David Pakman Show, perhaps in an attempt to dazzle those in David's audience less familiar with Bitcoin's epic run up to date, shared some numbers on Bitcoin's underlying performance over the last decade. And it's not ungermane of us to not notice that, right? He cited the example of Netflix as the best performing stock from 2010 to 2019, and how Bitcoin over that same period outperformed the world champion of the stock market by over 2000x, right? He also brought up the recent price crash in the oil futures market. He pointed to the irony of negative commodity prices in a world that pokes fun at the volatility surrounding Bitcoin markets, which of course we did as well yesterday. Despite the historic crash in U.S. crude futures and what it signals for the health of the overall economy, Bitcoin was mostly sideways that entire week. And now, as we know, it's even charging ahead, reaching up for the $8,000 levels, right? Now, oil is just the first such major industry to take a hit due to the COVID situation, like the effects of that actually rolling out to the supply chain, the effects of that actually affecting commodities. And we see it with demand for oil at an absolute low, with oil production ramping up. There's no place to put it. And so what's going to happen to the price? It's going to crash. Now, investors are likely to see other industries experience similar cycles, right? From consumer goods to technology, all over the place, right? There's just lowered demand. And of course, there's lower money. There's less money for people to invest and spend for consumers, for consumption going into people's pockets, right? So the idea that we're going to see some V-shaped recovery seems silly, right? We've seen a great recovery lately with some investor confidence, and I think long bias that the money printing is going to prop the market up, but the effects are going to be felt in the actual economy. Remember, the stock market doesn't reflect the actual economy, right? It reflects our perception of the future, right? A little bit of fear, panic, greed, and manipulation thrown in there. Now, with panic over the COVID crisis, really pushing normal investors off of their square. And the reality, even like CNN and CNBC is talking about the fact that we are moving into a recession or even a Great Depression moving ahead. Markets have been unwinding. Investors are liquidating positions so that they can shore up capital and patch holes everywhere across their portfolio. And this includes some Bitcoin and crypto holders who found themselves needing to move into cash quickly, most likely to meet other financial obligations or priorities that are going to take precedent over their speculative adventures in the digital asset space, right? However, measures being taken currently, according to Mashinsky, to stabilize the United States economy, the stimulus packages, other government spending, money printer go burr, will eventually draw investor attention toward the fundamentals behind Bitcoin, making it appear safer than ever before against a backdrop of a troubled world economy. He also pointed out how there is currently more money piled into bonds than stocks, and government's current course of action that they are currently undertaking now in order to save the economy may inevitably, inexorably weaken the United States dollar, right? Not only the United States dollar, but government and investor confidence and its bonds, right? Enough to bring some of those bondholders to reassess their positions and consider turning to crypto, all right? Concluding that betting on Bitcoin right now is betting on deflationary pressures winning, and when everyone gets nervous, they all flee to cash, and that includes selling Bitcoin despite all of that, right? Bitcoin still remains one of the best stores of value that exists out there right now. So what do you guys think? was Bitcoin temporarily dragged down along with everything else melting down in March? Do you think it's starting to decouple from traditional markets as the money printing fires up and the economy continues to unravel as positions continue to unwind? Or do you think this is a unique time in history and that there will be nowhere for investors to run as markets unwind heading forward? Will Bitcoin's safe haven status be tested and finally broken? Or let's not say broken, but will it continue to trend down along with the rest of the market? Or will its true value come shining through over the next 12 to 18 months as the rest of the world continues to plummet into chaos and the true safe haven value of Bitcoin? Or, are we asking the wrong questions, right? Like, again, it's going to fall down, but that doesn't mean anything. Everything's falling down. There's no such thing as a hedge against deflationary events, right? Let us know down in the comment section down below.